Hey there, Ashley here with Phil's Accounting Firm. This video is to discuss what happens when you were paid a 1099 and because you've been keeping up with your accounting records, you realize that the 1099 that the company reported, the amount is incorrect. And you have been doing your due diligence to reach out to the company, and they have refused to change the 1099, and also you have to meet your tax filing deadline requirement. Okay, so what you would do to correct that issue after you follow the proper steps to attempt to get that 1099 corrected, you will have to file that 1099 regardless. I know, although the 1099 is incorrect, you will still need to file the 1099 exactly how the company reported it to the Internal Revenue Service. So I am going to actually show you how to offset the difference, the amount that's actually incorrect on the 1099 on your tax return, so you're not paying additional taxes if that income is overstated or understated. So I'm going to switch screens and I'm going to show you what that looks like on your Schedule C tax return. But before I show you, be sure to like this video, follow for more accounting tips, and if you have any additional questions regarding this topic, be sure to comment below. So here we have the Schedule C form. Like I mentioned before, you are going to correct the overstated 1099 income that you received from the company who has refused to file a corrected 1099. Now, you, without a shadow of a doubt, know that you received a certain amount based off your accounting records and bank statements, and you need to still file your taxes. Like I mentioned before, you must still file that 1099 the exact way that it's reported to the Internal Revenue Service to prevent audits and to prevent your tax return being flagged. Now, here is the scenario on how to offset that income that was reported incorrectly. Now, for this example, we're going to use the figure of $60,000, okay? So the company that paid you reported to the Internal Revenue Service that you received $60,000, but based off your accounting records, based off your bank statements, Zelle payments, or whatever way that you received your income from said company, you know without a shadow of a doubt that you received $45,000. So this is the Schedule C form. Line 1 is gross receipts and sales on the Schedule C form. So the difference we need to offset is $15,000 to prevent your tax return for taxing you self-employment tax on that extra income that you were not paid. Now we'll offset that $15,000 on the Schedule C. We'll write it off, and the best description to give this write-off is income offset. This is what I recommend to all of my clients so that you can notify the Internal Revenue Service that you are actually offsetting income. Now, in the event that you are audited, you will provide to the Internal Revenue Service, of course, a copy of the 1099. You'll need to also produce any types of communications, whether that's been via text, emails, that you have acted in good faith to attempt to get that 1099 corrected, but the company has refused to correct the 1099. And because you have your own filing requirement, you have to make sure that you file your tax return on time. You've actually done your due diligence, okay? So you will produce all that information to the Internal Revenue Service. Now, that's in the event that you are audited. Like I mentioned before, you've already went through the proper steps. You reached out to the company, you told them, hey, you paid me $45,000, not 60, but the deadline is tomorrow or quickly approaching, and you don't necessarily want to file an extension, especially if you owe, because you'll be responsible for filing your tax return late, in addition to paying your taxes outside of that April 15th tax deadline. So you are doing everything the proper way. Now, that's the first scenario because you were overstated income. Now, in scenario two, what happens if the monies that said company reported to the IRS is not what you were actually paid? You were paid more. Now, for this scenario, we're going to switch that 60K from line 1 on the Schedule C to 45,000. We're just going to reverse this thing, okay? So you on the 1099, it shows that you were paid $45,000, but based off your accounting records, your bank statements, you were actually paid $60,000. This is more of an easier fix, because in line 1, you'll just put the difference here versus writing it off in part B under the expense section. You're just adding the additional income that was understated to this 45,000. So they reported it $45,000 to the Internal Revenue Service, but you were actually paid 60, and you'll just add in the difference. And so 45,000 plus 15K is $60,000, and there you go. Now, unfortunately, I would definitely state that I have rarely seen where the Internal Revenue Service will audit you for reporting additional income. Now, it's more so when you're taking unreasonable expenses, or they will definitely question an expense versus income for sure, especially if you're not understating. You're actually adding additional income to the tax return. All right, so I hope this information helps, and if you have any additional questions, be sure to comment below. I will answer every single person in the comment section, and be sure to follow, like, and subscribe for more accounting tips. Not only do I cover business, I also cover personal. Okay, bye bye.